Hello and welcome to the day ahead. It is Thursday, January the 30th. I'm Andrew Gagan. Well, shares are set for a mildly negative start on the local market with ASX futures just down around 5 points. This after US Federal Reserve Chairman Jerome Powell explained the central bank's decision to leave interest rates on hold.
Inflation has moved much closer to our 2% longer run goal, though it remains somewhat elevated.
A notable difference in the latest policy statement is that the Fed has dropped a reference to making progress towards the Fed's 2% inflation goal, instead referring to the pace of price increases remaining elevated.
I think our policy stance is very well calibrated, as I mentioned, to balance the achievement of our two goals. We want policy to be restrictive enough to continue to foster further progress toward a 2% inflation goal. At the same time, we don't need to see further weakening in the labor market.
The unanimous decision to keep the overnight interest rate in the current 4.25% to 4.5% range puts the Fed in a holding pattern as it awaits further data and clarity on President Trump's policies.
I think where the committee is very much in the mode of waiting to see what policies are enacted. We don't know what will happen with tariffs, with immigration, with fiscal policy, and with regulatory policy.
Well, US Treasury yields rose in response to the Fed's statement, with traders pricing in fewer interest rate cuts this year. The yield on the 2-year note rose around 4.6 basis points to 4.25%, and the 10-year yield was up to 4.58%. The US dollar firmed against most major currencies. The Aussie is trading at 62.3 US cents. Meanwhile, the central banks of Canada and Sweden delivered widely expected 25 basis point rate cuts. And Bitcoin has jumped higher to be around 104,000 US dollars. Well, the Fed decision weighed on US stocks, which added to losses before recovering slightly after Jerome Powell spoke. Tech heavyweights, including Nvidia and Microsoft, led the losses. This was prior to earnings results after the bell. Microsoft reported slower than expected growth in its crucial Azure cloud business, despite beating estimates overall for quarterly revenue, sending its shares down 4% in extended trading. Tesla's quarterly results fell short of Wall Street targets as financing offers and discounts failed to boost demand for its aging lineup, but eroded profit. The EV maker said it was on track to roll out cheaper vehicles in the first half of the year, shares falling around 3.5% after the bell. And IBM surpassed analyst estimates for fourth quarter profit, driven by demand in its high-margin software unit as businesses increase IT spending, sending its shares soaring about 10% in extended trading. And Starbucks shares rose as it reported flat total net revenue of close to $9.4 billion in the first quarter of fiscal 25. Well, commodities are mixed. Oil prices have fallen to their lowest level since the beginning of the year after US domestic crude stockpiles rose more than expected last week. Brent crude futures more than 1% lower at $76 a barrel. Copper rose almost 1%, while iron ore was up 1% to $104 a tonne. And gold slipped as the US dollar and bond yields rose in response to the Fed's policy statement. Spot gold down around 0.3% to $2,755 an ounce. Locally today, we get international trade price indices for the December quarter. On the corporate calendar, we can expect quarterly results from Mineral Resources, Sandfire, Syrah, Karoon Energy, IGO, Vulcan Energy and Zip. That is your day ahead. See you again tomorrow.